Hello and welcome everyone to Yeshas Academy. Today we are going to discuss our latest RTP, which is meant for January 2026 examination. So let's take a look at these questions first. The first one, which of the following refers to the study of economic behavior of individual decision-making units, such as individual consumers, resources, owners, business firms, and free enterprise system? It means you're talking about not the entire macro, but individual or a particular decision making unit. So, of course, that will come under microeconomics, all right, rather than macroeconomics. And econometrics, I've told you, is nothing, not a different, subdivision of the subject of economics, but econometrics is used wherein we use computer modeling to study both macro and micro phenomena, right? Now, which of the following refers to the study of total aggregate level of output, income, employment, consumption, investment, price of the economy, that is the inflation. So all of these are not related to one particular business, one particular industry. You're talking about the overall averages. Macro has been derived from the Greek word macros, which means large. It's a bird's eye view. So here the correct answer would be macroeconomics. All right. And managerial economics is nothing but, it's another name for business economics wherein you're trying to manage the affairs of the business. Implicit cost is equal to. Now, implicit cost, if we look at, we know when we're talking about determination of accounting profit or loss or economic profit and loss, let's say our total revenue is rupees, let's say 1,000. From this, if I deduct explicit cost or accounting cost, explicit cost, let's say explicit cost is rupees 600. So this will give us what is known as accounting profit, because explicit cost is also known as accounting profit. So we have accounting profit of rupees 400. And let's say non-accounting cost or implicit cost, if we deduct less implicit cost, and let's say implicit cost is just rupees 100, then you have what is known as economic profit, and you have an economic profit of rupees 300. So business profit minus economic profit, of course, that cannot be the answer. Business profit plus economic profit, it means accounting plus this 700. No. Economic profit minus business profit. So economic profit is 300 minus business profit. So here they've given economic profit minus explicit cost, which in the RTP they've given the answer as the correct answer, but it should have been, if I deduct economic profit minus explicit cost is 600. All right. So 300 minus 600, and how much you getting? You're getting implicit cost as 300. Is the implicit cost 300 here? No. And if we look at economic profit minus business profit, so economic profit is how much? 300, and business profit, accounting profit is 400. 300 minus 100, if you do, you're getting minus 100. All right. So rather the answer should have been accounting profit minus economic profit. The answer should have been accounting profit, that is 400, minus economic profit, that is 300. So 100 rupees will be your implicit cost in that case. So none of the option matches here. All right. So none of the options are matching. So will not, this is a wrong question wherein none of the options are correct. If the demand curve for firm's output is perfectly elastic, then the firm is operating in a perfectly competitive environment, because perfectly elastic demand curve is a demand curve which is horizontal, straight line, because the firms are price taker, not price maker. Firm in industry that produces differentiated products are either monopolistic hota, then it could be a possibility. Monopolist, it means you're talking about monopoly. Either monopolistically competitive or perfectly competitive. Now, differentiated products are found in monopolistically competitive but not perfectly competitive. Homogeneous products are found there. Either monopolistically competitive, it means monopolistic market, or oligopolistic market. Yes, the answer will be option C. The type of industry organization that is characterized by recognized interdependence and non-price competition. So, first of all, interdependence is not found in monopoly because seller is alone. Perfect competition, no. All the firms are competing against each other. Monopolistic competition, no. There are large number of small firms. So it is only an oligopoly. So fifth will be answer C. Which of the following short-run cost curve declines continuously? Average total cost, it is always U-shaped. Marginal cost, again it is U-shaped. Average fixed cost decreases continuously because average fixed cost formula is what? Total fixed cost divided by output. This will be your average fixed cost. So don't you think total fixed cost remain constant? And if we go on producing more and more, it means we are increasing the denominator. So as a result, average fixed cost will continuously fall. Average variable cost will again be a U-shape. So C is the answer. Restaurant industry has a market structure that comes close to oligopoly, monopolistic. Perfect competition will not be there. Monopoly will not be there. Even oligopoly will not be there because in oligopoly there are few big firms. So it will be a monopolistic competition. And again, the answer key is given wrong here. It's been given as B. But why monopolistic competition? For example, if I ask you Bangalore, you want to buy paneer tikka. How many restaurants are selling paneer tikka? Hundreds of restaurants. All right. And do you think they charge the same amount of money? No. Do you think the taste that you'll get from each paneer tikka is exactly the same? No. So they are similar but non-identical. All right. So that is found in monopolistic market. Now similar and non-identical is also found in oligopoly. But in case of oligopoly, there are few firms. But we know that restaurant is not an industry which is an oligopoly because we have large number of restaurants available in any part of the country you go. So monopolistically competitive is the answer. Next, economic indicator of contraction and expansionary phase. Economic indicator of contraction expansionary phase by measuring the real GDP. So what is it called? Of course, it is known as business cycle. Leading on lagging indicator simply tells us where the economy was and where the economy would be. National income accountants avoid multiple counting by counting both intermediate and final goods. Absolutely no, it will lead to a problem of double counting. Only counting final goods, yes. Alright, if you want to find out value addition, then in that case, from the total value of output, you have to deduct the value addition. But if you want to find out the total value addition, either you add all the value addition done or you take the total value of output. So counting only final goods, intermediate goods, no. Now, what does Article 246 of the Constitution deal with? Division of legislative power between the center and the state. Excessive and indirect question. Excessive and unplanned public expenditure may lead to. It means you are spending too much of money and unplanned money. Most of this money will go towards wastage and the government will always be in a deficit that will create perpetual burden on the future generation. So economic stability, no. It will lead to fiscal crisis and debt burden. Reduction in money supply, no. If you are spending more money, by borrowing more money, supply will increase. Decrease in inflation, no, inflation will increase. Question number 12 now. Which of the following situation best demonstrates a market failure due to asymmetric information? Asymmetric information means what? Either the seller knows more than the buyer or the buyer knows more than the seller and they both are in a position to exploit their situation. So, a monopolist exploiting the market by reducing supply. No. Consumers, now this will lead to market failure. Alright. But this is not an example of asymmetric information. Consumers buying substandard product because they lack information about quality. Yes, this would be the answer. The government providing public goods like street lighting. No. Natural monopoly of economies of scale drive the market concentration. The answer is no. So correct answer is option B. Which of the following is not a part of money supply in the economy? Currency held by central bank. Yes. Demand deposits of commercial bank. It is a part of money supply because I've told you within the definition of public, we do not include central bank, we do not include government, and we do not include any bank that is accepting CASA deposit, that is current account, and the money received in the current account and the savings account. So currency held by central bank is not available to public because public cannot directly deal with central bank. Saving accounts of commercial bank, that is money with public. Time deposits, money with public. Money of public with the bank. So A is the answer. Which of the following is not a typical is the usual tool of monetary policy used by central bank? Open market operation by buying and selling government bonds. RBI can squeeze or pump money into the economy. So they are asking you not. This is a part of monetary policy. Changing the reserve requirements of commercial bank. This is also a part of monetary policy. SLR and CRR can be reduced or increased. Adjusting tax rate in the economy. This is a part of fiscal policy, not monetary policy. So C is the answer. Changing the discount rate. Alright. It means the bank rate, rediscounting rate. Again, it's a part of the monetary policy. Because if the rediscounting rate, that is the bank rate, is changed, then the banks also have to change the discounting rate. It means if the RBI is rediscounting the bills of exchange that the banks are presenting them at a higher rate, then the banks cannot discount the bill for the public at a lower rate. According to Heckscher and Olin theory, a country will have comparative advantage in the production of goods that require labor-intensive technique. If the country is surplus of capital, no. If I have surplus capital, why will I use labor-intensive techniques of production? That is contradiction. Utilize abundant factors of production that country has in large supply. Yes, whatever more we have, we are going to use it more. For example, a capital surplus country will use capital intensive techniques of production because labor is expensive. But a labor surplus economy will have cheaper labor, so they will use labor intensive methods of production. So this is the option correct. Required advanced technology in which country is technologically superior? Now, this is also an answer, but I told you before as well that if more than one option is correct and both B and C is not given, then you have to choose the one which is better. So here they are talking about factors of production. Technology is also one of the factors of production. So better answer would be option B rather than option C. Option C is not wrong, but B is better. Require high labor cost in a country with low wages. The question is again contradiction. If there are low wages in the country, then how can the labor cost be very high? Understood? Contradictory option. Next. In international trade negotiation, which of the following is the most common objective of countries involved in multilateral trade? So when one country is undergoing a negotiation with another country, they will both try to reduce the rate of taxes that one country is charging from another. For example, if India is dealing with America, America will want to impose a higher rate of import duty on Indian goods, and India will want to impose a higher rate of import duty on American goods. But if they both impose a higher rate of import duty, then the trade between India and America will fall down significantly. The only way to increase the trade between the countries significantly is by offering a lower import duties to one another. It means India will ask America, see, I am going to reduce the import duty on your products to this range, lower range. You also do the same so that I can export goods in which I have competitive advantage and you can export goods to India in which you have competitive advantage. So they both will try to fix a lower rate of import duty, right? To increase tariff custom duty and protect domestic industries, no. To reduce trade barriers and promote free trade, yes, this is a better option. Restrict foreign competition, no. To enhance domestic subsidies becomes trade distorting many a time, that due to which we the importing country can impose countervailing duty. So the correct answer will be, appropriate answer will be option B. Which of the following is a primary objective of India's 5-year plan? To regulate and control foreign trade? No, foreign trade is controlled through FTP, foreign trade policy. To promote balanced economic growth across all regions? Yes, definitely. To discourage private sector in favor of public enterprises will lead to crowding. And crowding out is bad. But if public sector is encouraged and private sector is discouraged, then the money from the private sector will be crowded out to the public sector. And if you encourage private sector and discourage public sector, then what will happen? Here investment will increase and here investment will decrease. Then again, the money from the public sector will be crowded out to the private sector. The effect will, one increase, another decrease, will nullify the economic growth. So, discourage? No. To ensure foreign aid and capital inflows into the country? No. On the basis of aid, you cannot make your country a developed country. It will create, and on the basis of inflows, what kind of inflows? Because if you, if you export, that inflow is good. But if you borrow, it will create a debt burden. So, the better answer is to promote balanced economic growth across all regions of the country. Which of the following is the most important source of India's foreign earning? Industrial export? No. We have not yet become a capital intensive country. Remittances from Indians working abroad? Yeah, we get a lot of remittance, but that is also not the biggest source. They were asking you most important source. Tourism? Again, no. We are getting a lot of money to foreign tourism, but it is not the most important source. Service export, especially IT and software? Yes. India is among the top 5 countries when it comes to export of software. Green revolution in India focused primarily on increasing production of food grains, especially wheat and rice. Right? M.S. Swaminathan was considered as the father of green revolution, and he was the one who learned from Norman Borlaug, who was a Mexican agriculturalist who first used the concept of genetic modification, and that we adopted in India, due to which India became from a food deficit to food surplus country, at least in terms of wheat and rice. According to quantity theory of money, if the quantity theory of money was given by Irving Fisher, wherein he gave an equation where it was MB equals to TT. M is the supply of money, V is the velocity, T is the transaction. B and T are assumed to remain constant. So when the money supply will increase, the price level will increase. So supply of money increases, the velocity and output remains constant, then the general price level will increase proportionately, not unpredictably. Right? So the conclusion from this theory was drawn that money supply and price level are directly related. Higher the amount of money supply, more will be the price level, and vice versa. Which of the following would be an example of counter-cycle fiscal policy during period of recession? So I've told you, when there is recession going on, it means during that time, unemployment rises, money supply decreases, production falls down, household income falls down, demand falls down. So government will have to revive the economy by adopting expansionary fiscal policy, wherein government can increase government expenditure. That is not sufficient. Decrease the taxes also government can do. So government will adopt expansionary fiscal policy. So increasing taxes will further lead to decrease in the household income and further will lead to further recession because demand will fall down. Reducing government spending will do the same. Cutting taxes, it means reducing taxes. Increasing government expenditure, the answer is absolutely option B. Reducing public debt by increasing saving. Again, if you're saving more, then if you're spending less, G will fall down. So further recession will increase. Avoiding changes in the tax and government spending, it means the economy will remain in recession. So to lift the economy from recession, you have to increase the G and decrease the T. T means direct taxes. A country's currency is depreciating. It means that the domestic currency is increasing in value relative to the foreign currency. No. When the value of domestic currency is increasing in value, it means domestic currency is appreciating. The country's exports will become more expensive. No, exports will become cheaper. Because if $1 was rupees 80 per dollar and I exported for $1,000, or let's say $1 million, when I receive $1 million, I will get, by converting in India, 8 crore rupees. But if Indian currency depreciates, it means the value of Indian currency falls down and I have to pay 10 rupees more to buy the same dollar. So now if I export same $1 million worth of goods, and when I receive this good, when I convert it in Indian currency, I'll get 9 crore rather than 8 crore. So export will become cheaper. So more exports will happen out of India. Countries' exports will become cheaper for foreign buyers, potentially boosting foreign trade. Yes. Central bank actively increasing the supply of money. No. Diminishing marginal utility. It means marginal utility is diminishing. So marginal utility of good diminishes over time. Over time, you have not mentioned over time. It means you are talking about a long period of time. No, the concept of marginal utility, one of the assumptions taken is that you are continuously consuming without any break. Utility, total utility is negative. Total utility can never be negative. Marginal utility can become negative because the change in utility, total utility can be negative. It means I was getting 10 utils, now I'm getting 7 utils. So it means the change is -3. Last unit of the good consumed will contribute most to consumers' satisfaction, which is absolutely wrong, because last unit consumed will give us least satisfaction, because according to marginal utility concept, as you go on consuming more and more, the each additional unit will give me less and less satisfaction. It means marginal utility will continue to fall. So the first unit of goods consumed will contribute most to the consumer satisfaction. Yes, after that, every unit will give us lesser and lesser satisfaction. Which of the following is not an internal economies of scale? Internal economies means which is within the control of the business, right? Like how many units you're producing, what is your human resource policy, whether you're efficient or not, whether you're able to increase up your production so that you can get, trade discounts on the purchase of factor inputs. If you produce in large scale, then your average cost of production will fall down. These are all internal economies. I can change, but it is not going to affect any business. But external economies of scale will benefit every business, and it cannot be controlled by one particular organization. Technical economies, financial economies, economies due to localization, and market economics. Internal is again technical economies. What kind of technology or capital intensive technology I'm using, that depends on me. Financial economies, it means how I'm going to finance my activities, from where I borrow, IPO लाएगा, debentures issue करेगा, or I will go for an borrowing from the bank. Marketing, economies, again, how about my marketing? How will I try to push my product? How to beat the competitors? All internal strategies. But economies of scale due to localization of industries, it means if suppose in a state more and more sugar is produced and more sugar cane is also produced there, then it means I'll get easy labor, easy resources, and I can produce at large scale. Likewise, if I want to set up an IT firm, then I'll be able to get quite a few handful of people in the industry in the city of Bangalore. So if I localize my industry to Bangalore, then I will get economies of scale. I'll get better manpower, efficient manpower at a competitive price. So option C is a part of external economies. If a firm's total revenue is not enough to make good, even dash, it is better for the firm to shut down. So the question is, in the short run, we have studied that when price or AR is less than ABC, you should definitely shut down. But if you take it to the total, that price AR will become TR, and variable cost, average variable cost, will become total variable cost. It means from your revenue, if you are not able to recover even your total variable cost, then you should definitely shut down. So the option is D. I hope this helps you understand what kind of questions are asked in the examination. So if there is further update with regard to any more MTP, then I'll be discussing here on Yeshas Academy. So please subscribe to the channel to get more and more videos like this. All the best.